Today in this video, we're going to talk about how to get the lowest interest rate on your mortgage. That's right. Rates are going up, continuing to go up. How to get the lowest rate on a mortgage. Check it out. Hi, I'm Rhonda Burgess, and I'm a real estate broker and mortgage underwriter here in the Nashville, Tennessee area. And my firm is Southern Living Realty Partners. Okay, we're going to talk about it because, I know y'all been watching these mortgage rates done went up. I'm not even going to say I told you so. I've been doing these videos. I know I did this video at least 3 years ago talking about why you should buy while the interest rates was low. But now the interest rates are not so low. They're still good. Let's put this into perspective. When I bought my first house out here in Smyrna in 2007, my interest rate was 7.5, and that was good. Woo! We were celebrating. It was good. It was good because rates had been a little higher and they came down some. So even though the rates now in the sixes, I do believe 6% interest rate for a 30-year, that's still a good interest rate. Because especially you talk to people who bought in the 70s and 80s when the interest rate was 14, 15, 17, 18, 19%. Hey, that 6% is still good. But we're going to talk about how you can get the lowest interest rate. One thing that just irritates me, just for a minute, I'm gonna go left for just a minute. One thing that irritates me is, everybody wants to talk about they want a zero down payment mortgage. That's good. That's cool. I dig it. You're not gonna put no money down. But just know that in order to get an interest rate that may work, that may make your mortgage work, make your debt to income work and make your PITI work, it all depends on the interest rate. Okay? And you're gonna have to pay closing costs. So if you want to, back in the day, it used to be real popular. A lot of lenders and builders too would promote, if you use their mortgage company, they would pay for your 2-1 buy down. Okay. And that just means that you could buy the rate down. That was prepaid interest that you would pay at the front. So you would pay it as part of your closing costs, or the lender would pay it, or the builder would pay it. Okay. I haven't seen a 2-1 buy down in, I can't tell you how many years. I've been doing real estate since 97. It's probably not since maybe the early 2000s, maybe. Something like that. But anyway, you can buy down your mortgage, meaning you can pay points. And remember, a point is 1% of your loan amount. So if you're buying a $300,000 house, each point is $3,000. Now, if the builder's not paying it, which they're not, if your lender's not paying it, which they're not, that means you're going to have to pay it. And just to be quite honest, I haven't seen a 2-1 buy down in years. What I'm seeing more now is like a 3-to-1, a 4-to-1 buy down. Meaning to go from, let's say rates are today a 6.25, but you need a 5.25 just to make your DTI work, just to make your numbers work. Okay. You may have to pay as much as 4 points or more to get down to that 5.25. So that 1 point at 3,000, make that 4 points. Just for comparison purposes. Let's just say it's 4 points to get you down to 5.25. Okay, because your interest rate may have already been higher because your credit score is not as high, or you're carrying a lot of debt to income, or you got some other issues. So let's say, honestly, it's 4-to-1 to get you down there to that 5.25 interest rate that you need to make it work. That's $12,000. That's $12,000 just for the buy down. I haven't even got to your closing costs. That's on top of your closing costs. I need for y'all to understand that. I know you all, because y'all call me all the time, especially from the USDA videos where I'm talking about, it is a zero down payment. It's a zero down payment. But listen, down payment and closing costs are not the same. They are not the same. It does not matter. You may get 100% financing on your loan, but again, who's paying your closing costs? And so now that you need 4 points to buy down your interest rate to make your loan work. Who's paying that 12 grand? 12 grand plus probably another 12 grand in closing costs. So you need 24 grand to come to the table with. Who's paying that? You are. You are. I need for y'all to understand that there is no free lunch. Everything is going to cost something. Everything is going to cost something. You're going to pay somebody. So I'm still being asked all the time, well, do you think it's a good time to buy? You think it's a good time to buy? I was saying this 2 months ago before the Fed raised rates twice. They've raised it 3/4 of a point. Twice. That's a point and a half. And I still have people that's calling me, well, you think I should buy? I thought you should have bought 2-3 years ago. I thought you should have bought 2-3 months ago. I mean, I'm just looking at the interest, if nothing else, just off the interest rate alone. I know the prices have gotten higher. I know. I mean, I don't know how much, I don't know how much more they're going to go up. Here, and remember, real estate is very local. Here in my Nashville market, we still very fast. You may not see multiple offers the first day, the first week. We just put buyers in under contract the other day, and we were still bidding against, guess who? An institutional cash buyer. They're still here. They're still out there. OfferPad, offers, Mark Spain, they're still here. See, that is not what is being talked about as much. Again, I'm gonna go left for just a second. That's not what's being talked about as much. But again, we were competing against cash offers. So just because regular consumers like me and you, some of y'all may be sitting out like, I'm not going to do this. You got beat down over the past year. You got blowed out the water on so many offers, and now you're just disgusted. And now your purchasing ability has come way down because the interest rates have gone up. I dig it. I understand why you're sitting out. I totally understand. But what you also need to understand is this market is going to keep going. You got institutional buyers with deep pockets. Let me say it again. I've said this in a previous video. When you're paying cash, you don't care what the interest rate is. I'm going to say it again for the people in the back. When you are a cash buyer, whether you're an institutional buyer, you're a local investor, you done sold your house in one state and you finna move here to Nashville, and so you made a lot of money when you sold your house there. Do you care what the interest rate is? No, because you still gonna buy some. Because you still got to have somewhere to live. Everybody still got to have somewhere to live. Everybody still need a roof over their head. So what I'm saying to you is the interest rate is only affecting you when you're getting a mortgage. But for the cash buyers, they're not phased. They are still buying. They are still buying. So don't believe the hype that you see with, the market's gonna crash. The market's gonna crash. No. I don't see it. I've been saying this for 3 years. I don't see it because there's too much money out here. It's too much money from the cash buyers, the investors, the institutional buyers. There's too much money. It may level off a little bit, but still. Now, I know they're saying that, the Fed may slow down on raising the interest rates going forward. We'll see. You never know. Things change day to day. So all I'm saying is this, you're going to need money to buy a house. If you want the lowest interest rate, if you need to bring your interest rate down just to make your numbers work, you're going to need to be prepared to pay points. And each point is 1% of your mortgage amount. You're going to need to be prepared to pay your closing costs as well. Now, with the market shifting a little bit, you might be able to get the seller to pay some of your closing costs, but I wouldn't hold my breath on that. If I were you, I would still plan on, I got to pay my own. You need to get your money together so you can pay your own closing costs and your own points if you are going to buy down the interest rate on your mortgage. Again, my name is Rhonda Burgess, and I'm a real estate broker here in the Nashville, Tennessee area and a mortgage underwriter. If you need help with buying or selling a home here in Nashville, Me and my partner Mike will be happy to help you. You can reach me at any time. My cell phone number is 615-554-0832. Thank you, and as always, have a blessed day.